At a certain point, I began to realize that trading ceases to be a set of actions and becomes a decision-making process. Previously, everything revolved around entry and exit points, but now the main focus has shifted to the thought process itself. How I assess the situation, what scenarios I consider, how objective I am in my conclusions. All of this has come to play a far greater role than any specific setup. More and more often, I start the day not with the charts, but with the question, what state of mind am I in? Am I ready to make decisions without rushing, without pressure, without the desire to prove something to the market? If the answer is no, trading is simply put on hold. At first, this approach seemed overly cautious, but in practice, it was precisely this that allowed me to eliminate a significant portion of unnecessary trades. Trading currency pairs, commodities and shares is now perceived as a single ecosystem, rather than a set of separate instruments. I began to see the interconnections, how movements in the dollar affect commodities, how the behavior of the stock market influences the overall sentiment of investors. This does not provide precise signals, but it creates a context that helps me make more informed decisions. A key step was rethinking the role of profit. It ceased to be the goal of every single trade. Now, it is more of a byproduct of a properly structured process. If not, even a successful trade means nothing in the long run. I started paying more attention to consistency, not to how much I managed to earn in a day or a week, but to how consistently I stick to my rules. This shifted my frame of reference. Success is measured not by the figures in my account, but by the quality of my execution. At the same time, I began to notice just how much information noise affects me. News, opinions, forecasts, all of this can subtly distract me, so I consciously limited the flow of external information, keeping only what truly influences my decisions. The rest is background noise that shouldn't interfere with the process. I began to pay particular attention to dealing with mistakes, not from the perspective of avoiding them at all costs, but from the standpoint of analysis. Every mistake is an opportunity for growth, if analyzed correctly. I stopped avoiding these moments and, on the contrary, began to use them as a tool for development. Interestingly, over time, the desire to constantly increase my workload has faded. It used to seem that more deals meant more opportunities. Now I realize that excessive activity often leads to a decline in quality. It is far more important to choose the right moment than to try to get involved in everything. Trading has gradually become a more relaxed process, without unnecessary stress, without the constant chase for results. This doesn't mean a lack of ambition. Rather, it's a shift towards a more sustainable approach, where the priority is preserving and gradually growing capital. Nowadays, I find myself thinking less about how to make more money and more about how to make the process even more reliable, how to minimize the impact of random factors, how to maintain stability through different market phases, and how not to lose the system I've built under pressure from external circumstances. And perhaps the main conclusion at this stage is that the market does not require constant involvement from the trader. It requires readiness. Readiness to act when the conditions are right and to stay out of the game when they are not. It is in this balance that the level I am striving for is formed.